Hello and welcome to this interview on money control. We are in conversation with the leadership of Stellaris Venture Partners, which has just closed its third fund. It's a $300 million fund to find out more about where they're going to deploy this, what new sectors they are eyeing. We're going to be in conversation with Rahul Chaudhary, Alok Goyal, as well as Ritesh Banglani. Thank you all so much for joining us on Money Control. Rahul, if I can start with you, this is a very rapid scale up for a fund that's, just 7 years old, right? You're a startup in a sense, and you've already raised three funds. What's, exciting LPs? Is it, some of your multi baggers like Mama Earth, Whatfix? How easy or tough was it to raise this third fund? And did you always target 300 million, or, did you kind of want to raise an even bigger fund?
Thanks, Chandra. Thanks for having us on the show. So first of all, just in terms of target, our plan was to raise between 250 to 300. We
Hmm.
ended up getting more than that in terms of subscription, but we decided to cap it at 300 because our strategy is to continue investing in very early stage companies, companies that are at seed or series A stages. And for that purpose, we think this is the right fund size that we have. In terms of LPs, clearly a lot of our existing LPs were very bullish. So they re-upped. At the same time, we were able to get some global institutional capital, more of the foundations, pension funds, global fund of fund also to add to the mix. So where we landed was with about 20 institutional LPs and several founders who have been our early supporters from day one as part of our LP pool.
Got it. Ritesh, will the stage of investing change? Will it still be seed, Series A, or will you also chase opportunities in, the growth stage since you have a big fund now?
So Chandra, while there are opportunities at every stage of investing in India, given the growth in the Indian economy and the rapid digitization of the Indian economy, we think our sweet spot is early stage investing. That is what we have done for close to 2 decades now, and we believe that the best match between our skills and market opportunity is in early stage investing. So we will continue to enter into companies in seed and Series A stages. However, two things will change. One, the larger fund will allow us to take a larger ownership in portfolio companies that we have gradually increased between Fund 1 and Fund 2, and we believe there will be a further increase in our average ownership between Fund 2 and Fund 3. And second, the larger fund will allow us to keep a larger follow-on reserve so that we can back our winner companies for longer through multiple rounds of investment.
I think you've stated that you plan to invest in 25 to 30 startups from the third fund, but any new areas that you will look at?
So, Chandra, our sectors in general remain very long-term oriented. We are looking at opportunities which are going to stay true for the next 1 to 2 decades. I think the one thing that is coming up very rapidly, and I think will be a significant part of our fund, are going to be opportunities created by the growth of artificial intelligence. While that was true even for our fund two, I think we are seeing both on the consumer side as well as on the enterprise side just the amount of disruption and the opportunity it creates is pretty significant. So we'll give you a few examples both on the enterprise side, and then we'll let either Ritesh or Rahul talk about the consumer side. On the enterprise side, I think what we are seeing is that in the creation of AI applications, developer tools, because even the software development lifecycle is getting redefined through the use of AI, as well as combination of software and services where India has a unique advantage. We are seeing a rapid rise in those opportunities. In fact, as a matter of fact, in our third fund, we have already made our first commitment, and this happens to be in the testing automation space through AI. So we are seeing a very rapid growth in these opportunities.
I was just going to add that on the consumer side, similarly, there are a lot of areas in which we think AI can play a breakthrough role. So in Fund 2, we had invested in a company called Dashtun, which is
Mhm.
building a webcomic consumer platform, but most of its content is generated by AI. Similarly, we are very excited about what AI can do in the education space, financial services, healthcare. So if you go to sector by sector, in terms of democratizing access to some of these services to, everyday Indian, AI could have a very interesting role to play as well.
Got it. Rahul, you also made some of those early bets in the consumer space, whether it was Big Basket, ID, or Mama Earth. How exciting is the space today, considering, the growth of quick commerce? We are seeing many QC first brands take off. What opportunities do you see there?
So first of all, we are very excited by the growth. So what happened between 2015 to 18 with the e-commerce platform allowed a lot of young startups to be built online. For
Hmm.
us, this is another of similar era being played from two players. Now we'll have seven players in the quick commerce space alone. What that means is several categories which struggled on commerce on the e-commerce platform. So like lower AOV products, impulse purchase products, they have a very good chance of being built on quick commerce. We also feel that a lot of peripheral or infra-based services will get built. So just around hardware and robotics, there is a play with number of dark stores that will come up in the country. Logistics and warehousing is another play. Uh, Over time, there will be optimization that these kind of companies will need. Again, building optimization as well as scheduling kind of platforms. So there are multiple opportunities, and I'm sure founders will also teach us what more can happen. But whenever there is a platform disruption that happens, new opportunities do get created, and that is, at least for us as investors, is quite exciting. You might have vertical commerce plays that emerge as well.
Actually, Chandra, if I may add to that, you look at it, India is growing at about 7 to 8% real GDP per year.
Ritesh, Mama Earth was a very good public market outcome for Stellaris. What can we expect next from your portfolio, which is the next IPO ready firm, so to speak?
All our companies are IPO ready, Chandra. Uh,
Give us a
but
name, what fits, anything else that comes to mind?
no, I think what the last 3 years have shown with the spate of tech IPOs in India is
Hmm.
that the Indian public markets both understand and value the rapid growth that technology companies can actually create. However, they require the companies to be profitable at the time of going public. Unlike several other public markets, I think Indian markets do value profitability, maybe even a little bit over growth. That has been the learning of the last 3 years. So we feel we are in a very good position because we have historically invested in companies with strong economics from day one. And some of our companies are scaled up now to be able to access the public markets in the next, I would say, 2 to 4 years. We think Whatfix might indeed be a good candidate. They received their Series E funding a couple of months ago, and we are hopeful that in the next couple of years they will reach the scale and profitability that will allow them to reach the public markets. And then in our portfolio, we hope that every 2 to 3 years we will be able to present one opportunity that is of interest to public market investors.
Alok, will all the investments going forward come from Fund 3? Have you completely invested from the previous funds?
So we have finished picking our new companies from Fund 2 already. But like Ritesh mentioned, we always keep strong reserves to be able to back our winners for the long haul. And that will still continue from Fund 2. But any new companies that we are investing in will now only be from Fund 3. And as I mentioned, we have already started, or we already committed our first deal from the third fund as well.
One final question to you, Ritesh. You've also elevated, one of your principals to partners. So take us through the leadership additions that you've announced as part of this new fund.
Yeah, Chandra, this is a proud moment for us because we have added a new partner to the partnership, and this is someone that we have known for a very long time. I had invested in Naman's company in our previous fund when he was an entrepreneur. He went on to start another company after that, and then in 2019 we were able to convince him to come and join our investment team. So he's a specialist on the consumer side. He has led investments in companies like Dashtone, companies like Zook, and comes with the experience of being an entrepreneur himself. So he's able to empathize with entrepreneurs really well. And he has now spent more than 5 years at Stellaris, and we think Naman was ready to start leading investments as a partner in the firm.
And Chandra, if I may also add to that, I talked to you about what we are seeing as a disruption on the AI side. We increasingly felt that with deeper tech businesses getting created out of India, we also need to have a deeper tech talent. So we have
Hmm.
another colleague, Vardhan, who was in New York for the last 15 years, was a specialist in the AI ML side, on the engineering side, and has just moved with his family to India and joined Stellaris actually this week, if I may say. So that also bolsters our team and add new capabilities.
Great, great, great to see that you're reversing the whole brain drain effect. But on that note, thank you very much, Rahul, Ritesh, and Alok for joining us on Money Control.